So, AMC and why I'm not invested in it. So, firstly, um, I was having a conversation the other day on these YouTube streets with a friend, and we were going back and forth as to, well, the conversation was really about, convincing me that I should be invested in AMC. And, I saw their point of view, but let me tell you the reason why I'm not invested in AMC and the standpoint that I'm coming from. The first thing is, you know, this whole AMC play is a play of what they call a short squeeze play. And the short squeeze is a fundamental play. Now, if you know anything about us and what we do, we are technical analysts. So we only do plays based on technical analysis, right? So, if you need to know why we utilize technical analysis over fundamental analysis, then you can check our YouTube page, our YouTube channel, and you can see a video on, well, the video that we did, technical analysis versus fundamental analysis, right? So that's kind of the first reason. Any sort of play that I do in trading will always be a technical analysis play rather than a fundamental play. That's the first thing. The second thing, as I said, is that this play is a short squeeze play. So for those who don't know, basically a short squeeze play is, well, first you have to understand what shorting is. Long story short, no pun intended, shorting is when you are making an investment that the price of something will go down, right? So they say when the price goes down, it's called shorting. And when the price goes up, it's going long, right? So this short play on AMC, well, let's start from where it started, right? AMC Theaters here. You can see here in this headline is from the Market Realist. And you can see it says, are AMC theaters closing amid the COVID-19 pandemic? So essentially what happened is, the COVID-19 pandemic happened. People were not allowed to go outside. A lot of these establishments, including theaters, had to close down. People couldn't go into these theaters. So because of that, they lost a lot of revenue. And it looked like the stock price for AMC theaters and AMC in general was going, the price was going right down. So in a short play, you basically are, hedging your bets or speculating that, that the price of the asset or the company will go down. So the origins of this short squeeze was a bet that this is going to, the price of this is going to go really low. So a lot of these investment funds got involved and they shorted AMC. Now, what happened is they shorted the stock more than stock was available, right? And then once that stock went down and it looked like AMC was dead and buried, dead in the waters, if we look at this next headline, we can see here it says AMC raises 917 million to weather the dark coronavirus impacted winter. So although all of these investment funds were invested in the stock price of AMC crashing, they managed to turn it around, right? So this is basically the beginnings of our short squeeze. So a short squeeze is essentially when, retail traders or the everyday trader like me and you go against what these big investment funds are betting against, right? So they're expecting the price of AMC to completely tank. And then, somebody amongst the retail investment community, they have noticed that, hang on a minute, even though these major institutional investors have shorted this doesn't seem like the right play. This seems like, AMC can make this and get through this storm, right? So long story short is that AMC ended up raising all of this money, which showed that, AMC was not dead and buried in the water. And, as the headline said, it was able to weather the storm. So because the retail investors noticed this, they ended up buying up a load of AMC shares. So what happens is, once people start buying these shares, it's increased demand for these shares, right? So anything that has more increased demand means that the price of the thing will go up. And this is what happens. If you want me to do a full breakdown of what is short selling and what is a short squeeze and all that, let me know in the comments, and then I'll do a whole video explaining what short squeezing is and short selling and things like that is, and how it affected AMC and GameStop and all those things. But this video is more about why I'm not invested in it, right? So essentially what happened is they pushed the price up and it went above where a lot of these retail investors were invested for selling. So what happened is once the price goes above, in order to, get out of your position of shorting, you have to buy back the stock, right? And what happens is if the stock is more than the price that you bought it for, more than the price that you shorted at, you're going to have to buy it back at a higher price, which means you're going to lose money. So what a lot of these investment funds will do, these institutional investors, they will try and wait out the storm for the price to go back down. And, if the price keeps going up, they have to hold longer and longer. Now, remember that if you know anything about shorting or short selling, that when you do short, you have to pay basically an interest in order to hold your short position. So the longer the price remains above the price that you bought for, is the longer that you will have to pay interest on your position. This is kind of just simplifying it. And so what's happened is this whole thing has become about, the regular retail investor going up against the institutional investor, right? So the institutional investor has, shorted this company. AMC, a lot of people have a lot of sentimental value to AMC. They've seen a lot of films there. They have childhood memories going there with their family, their parents, and all of these things. So people have a lot of a strong connection to it. And it's perceived that these, institutional investors are trying to kill off this well-loved brand just in order to make some money. So it's kind of become a thing where, the average everyday Joe Blogs can go up against this major corporation that they can perceive is, trying to kill their childhood memories, if you want to put it that way, right? So we're in a situation where it's kind of like a standoff, where the retail investors are buying up these stocks, which is driving the price of, AMC to go up, which means that these big institutional investors can't exit their position. And if they do exit their position, they will essentially exit for a loss. So they're trying to hold on as long as possible in order to not make that loss. But again, every day that they hold on to their position, they're paying interest on that position as well. So it's a kind of whole David and Goliath back and forth standoff, right? So, I can understand why retail investors want to do that. And, I connect with this whole, fight the power kind of narrative that's going on here, right? But for me, I'm a type of person that I prefer to make plays based on the financial returns, right? I'm in investing in order to maximize my gains, right? This is what I'm here for, to get the maximum return on my investment. The sentimental play is not really my bag. And I understand it, as a fight the power move, but that's not really why I'm here, right? So, and if you want to look at AMC, how badly it was shorted, this is really a move by these investment funds to be quite bad. But if we look at the 10 most heavily shorted stocks of January 2021, we see first was GameStop, here at 121% interest short. Now you might be asking, how do you short something over 100%? If there is a certain amount of shares available, how do you short more than the amount of available shares, right? Because the available shares would be 100%. So how do you short it 121%? Well, again, if you want me to do the video on how short selling and short squeezing works, let me know in the comments and we'll get into that. The second most shorted company was Dillard's, and Dillard's was shorted 95%. And then the third most shorted stocks of January 2021 was AMC Entertainment. Now here it said 79. A lot of people out there believe that this is not an accurate figure, and actually it was shorted more than 79. But if we want to go by 79, what it says here, we can say that it was shorted by 79, right? So so as I said, so this is a what they call a fundamental play, right? It's based on fundamentals of what's going on out there, not necessarily based on the charts. And I always like to make my decisions based on the charts, right? So why did I not invest into this? So before we get into the reason as to why I didn't invest in AMC, we've got to understand something called cost of opportunity, or they call it opportunity cost. So if we go over to Investopedia, we can see here, what is opportunity cost? Let's take a look. Opportunity cost represents the potential benefit that an individual, investor, or business misses out on when choosing one alternative over another. Understand? Because opportunity costs are unseen by definition, they can easily be overlooked. Understanding the potential missed opportunity when a business or individual chooses one investment over the other allows for better decision making. You can see here, opportunity cost is the foregone benefit that would have been derived from an option not chosen. Excuse me. To properly evaluate opportunity costs, the costs and benefits of every option available must be considered and weighed against the others. Considering the value of opportunity costs can guide individuals and organizations to more profitable decision making. Okay, so for me to kind of summarize that, what it means, it basically means that, your resources and funding is not unlimited, right? So you have a choice as to, if you want to invest that money, you have a choice as to where you want to invest it. So let's say, for instance, you have, $100 or £100, and you're looking for investment opportunities to invest in. Let's say, for instance, you're going to invest in an opportunity for a year. Opportunity A gives you a return of 100%, and opportunity B gives you a return of 50%. Now, if you put your money into opportunity B, which returns 50%, then the cost of missing out on opportunity A would be 50% of that money. So which will be, your 50% return, which is, in this case, would be $50, right? So the opportunity cost of going with B is $50 because you could have got $50 or 50% more had you gone with opportunity A, right? It's the cost that you're paying to not have gone with the better opportunity, okay? So having said that, let's take a look at some of these charts. So I'm going to take a look at AMC now. Let's pull up the chart. So before we get into, this precise reason why I'm not invested in AMC, let's just take a review of the AMC chart as itself, as a whole, right? So here we have AMC Entertainment Holdings. This is our 4-screen setup. Now, you may notice that this chart might look a bit different to your chart. That's because we have our special coded custom indicators from Focus on Investing. If you would like to get access to our templates and our special custom coded indicators that help you to trade better and trade a lot quicker as well, and allow you to identify opportunities more easily, then go to focusoninvesting.io. But so if we start here, we starting with the monthly time frame. If we zoom out a little bit, we can see that AMC in itself, hasn't really had, great action, over time. We see a little bit of a raise here. Let me get my drawing tools. We can see that price, raised up a bit here. Went a bit sideways for a while. We had a bit of a pullback and up and down. If you want to really look at it, you could say it went through a little bit of like a consolidation here. So this is from, December 2013 all the way up to when it broke out. It broke out on August 2017. So that's what, 4 years? So we had 4 years of consolidation of AMC, not really moving in any sort of direction. And then we fell out of this channel, as I said, in August 2017. We hovered still around our support line. Price attempted to break through the support level here. We got a little fake out here for the 2 months of September 2018 and October 2018. And then price fell all the way down. And you can see here that it fell down to our low of $1.91. So what happened here? This was the point, as we showed earlier, where AMC got that injection of funding. Let's go back and pull that up again. Let me get this. So that point, well, so sorry, that was the first, this is before we got the funding, right? This point here was, let me pull it out for you. This point here was here, AMC theaters closing amongst the COVID-19 pandemic. So this is the point where they made their announcement that they were going to be closing their theaters, okay? Let me pull back the charts. So this was taking place, you know, this is, well, the announcement happened before this. The announcement happened during COVID, but this was kind of its low point. It reached its lowest point of $1.91, and this was in January. So this is beginning of 2021, right? We've gone through the whole COVID situation of 2020, which is this area here where we see these kind of small barred candlesticks. You can see there's a lot of indecision in these candles. There are a lot of small bodies and quite long wicks. So this is this whole swing period here. And you can see gradually that price is slightly going to the downside here, right? And then we hit our low. And then once we hit our low, this is then when, let me pull it up. This is then when we had our announcement here of AMC raises $917 million to weather the dark coronavirus impacted winter, right? So this is that point. So from that point on, we can see that on the charts, we had this massive spike in price, right? We had this big raise up in price, and this is the beginning of the short squeeze. This is when everybody got involved and the price reached a high of $72.62. This is amongst, January 2021. But since then, we have seen price falling down. So we can see since then, prices come back down. We're going to take a better look at this in some of the smaller time frames, okay? So let's go to our weekly time frame. If we look at the weekly time frame, we can see in better detail, the rise and fall of this. So on the weekly time frame, we can see here, if we utilize our moving averages, moving averages are a great tool for you to help analyze stocks. So if you want to know more about using a moving average strategy in order to invest into these stocks, go to our channel. We have a video on a moving averages strategy on there. So I'm going to assume that you're kind of read up on the moving averages strategy and how to utilize them. But we can see that here, price boosted right high above the moving averages here. And then you can see slowly over time, it's come back down. We're actually trading below our 50 simple moving average here. And we're actually just trading on our 200 simple moving average. So let's go to the daily time frame. This is really where we want to be and want to have an analyzation of this whole stock. Even though analyzation is not a word. So we can see here, price was our low. This is our area where it fell down to its lowest. And then we can see, at this point is where we had our first spike. We then had our pump and our dump. And then over time, slowly, it rose slowly, it grew slowly. And then here's where we had that massive spike where we went to, $72 and whatnot. Well, if we zoom in a bit closer, we can see that price since that point, has always been on a downward trajectory. it's always, if you look at the angle of the arrow, it's on a downward slope, right? Um, and so the idea of the short squeeze is that, you want to hold this price and, the price won't go down. Therefore, the big retail investors can't exit their position. And at a certain point, they're going to be forced to exit their position. And when they're forced to exit it, they will have to come to those people who own the stocks and pay a high price in order to exit their position, right? So what happens when somebody wants to exit their position? Well, that means they will have to buy the stock, therefore increasing the price and pushing the price up again. But if we look here, we can see that that's not actually what's been happening, right? We do a quick review of this stock. Let me see if I've got all of my indicators on. Yep, we do. So we can see that, if we look at our moving averages, we can see how entangled and crisscrossed they are. This is kind of like the first indication that, price is not trending in the direction that we want. We can see on this area here, let me get my pen. If we look at this area here, in this area here, you can see that the moving averages are ordered in the order that we would like them to be ordered, which is the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average, and price trading above all three of those, right? So this is a great, this is what you would call parabolic, or, a pump or a spike in the market, right? If you were invested before this, you would have gained great profits from the price being pumped up, right? And we can see here that there's great separation between the moving averages and price. This is a great bullish sign for any investor. But then as we go along, we can see that let me zoom in a bit. I'm going to do that. You can see, let me get rid of this. You can see, look at the condition of these bars. If you know anything about how to read bars, these are not great looking bars. Any bars with long wicks are not great to look at. And you can see there's a lot of indecision in these kind of in between bars here. You can see a lot of scatty pricing. One bar is a lot lower than other, jumping higher, lower, higher, lower. A lot of indecision, small bodies and long wicks. Again, this is not, a great sign for price. And what is happening here is basically once the price was pumped all the way up here, as the news of this, AMC play comes about to people get the news at different points. So at different points, people want to get involved. But at the same time, people that were in previously are getting out of their position. So they're selling. So there's people that, when you see like indecision candles like this and candles all in kind of like a similar sort of area, this is essentially, a fight, a bear and bull fight of people getting in and out of the market. As people try and buy and push the stock higher, people that are up there are selling to get out. So we've seen a lot of price jumping up and down, up and down. Then if we zoom out, we can see that, after this point here, we can see that price then comes into a bit of a lull. So if we draw our support line, we can see that it's had a support line of about here and roughly like a resistance line. You could maybe say here, I guess. So after price came down from its spike, you can see that you had more sellers than you had buyers. So, this is not what we want to see for a short squeeze play, right? For a short squeeze play, you want to see price continue to go upwards, right? But that's not what's happening. That's not what's happening. We can see price tank down here. And then we've gone into this, this consolidation channel where, price is struggling to really, it doesn't really want to go below this, what is this? Let me look at my chart. $32.39 level. This is kind of acting as a level of support where price doesn't want to go below, right? We've got a little fake out here in this area. Let me draw it for you. You can see a little fake out here. Like price looked like it wanted to go lower, but then it pulled back to our support level. We can see a fake out here at the top where price appeared that it wanted to go higher, but then got pulled back down by its resistance level. And you can see it's gone through this whole consolidation channel before eventually when we got to here, which is the 1st of December 2021, price fell through our support level and then tanked to its more recent price level, which is the lows at this current time, right? So if we remove this and we look at our moving averages, we can see that the moving averages in itself are telling us that, you know, throughout this whole period, it was going sideways. It was a consolidated market because first we see the 20 simple moving average cross below the 50 simple moving average, then above, then below, then above, and then it tanked down. So it's only really ordered itself here in this area. You can see in this area is the first time we kind of see it's ordered itself, but it hasn't ordered itself in a bullish fashion. It's actually ordered itself in a bearish fashion, right? Which is not what we want to see if we're looking to have a short squeeze play, right? We want to see, you know, price continue to rise up as we hold our positions and put more of that's where the squeeze in the short squeeze comes from, right? It comes from squeezing the position that a lot of these investors are in order to get them to kind of lead their position. But what is happening is the price is actually going down rather than going up. We can see that, you know, it's at this point here that we can see that the 20 simple moving average actually, let me draw it on the chart for you. We can see here is where the 20 simple moving average crosses below the 200 simple moving average, and the 50 simple moving average crosses below the 200 simple moving average. So not only do we have the moving averages aligned, but they're actually aligned in a bearish position, which you would say that this would make this a bearish stock because of the alignment of all of the moving averages. But we also have a death cross, and a death cross is the signal of a bearish stock, right? That's when the 50 simple moving average crosses below the 200 simple moving average. So, you know, not only are we not squeezing these investors by the price going up, we're actually in a bearish stock. The price is going down. The price is going in their favor. So those who were shorted on this stock are actually correct. They're actually going to be the ones in profit and making profit, right? So just think about this, you know, you could say the short squeeze started from, you know, the 24th of May 2021, right? This is when we saw this boost going up, right? So we could say that we're just, you know, how many months is that? May. We're currently in March, so we say May, June, July, August, September, October, November, December, January, February, March, right? So that's 10 months. So, you know, and to be honest, if we even go before that, the play started way before that. So this is the big spike. We really want to see where price dipped to its lowest. So this is January 2021. So we're over a year, right? We're over a year in this stock. Now, you know, unless you rode it from, you know, where it was at its absolute low and got out at its absolute high, you know, if you did that, bravo, round of applause for you. I applaud you for doing that. It was a great play, right? But most people didn't get into it at that point. Most people got into it, as I said, once they heard it hit this high level here, or $72 level, that's when most people got into it. And those people that got into it at this point and are holding for the short squeeze have actually just been losing money this whole time as the price has been going down and it's tanked. It's turned from a very bullish stock to a bearish stock, right? So this is you losing money. Now, remember what I spoke about earlier with the whole idea of opportunity costs, the cost of opportunity, right? And, you know, this is something we've got to be thinking about. So if we think about the opportunity cost is while you were here holding on AMC to try and stick it to the man, right? And had your money tied up in this stock, you know, what was the cost of that play? What is the cost of you holding on to that position, right? As prices go down, as your money goes down, your investment, you start losing on your investment, right? Is there other places that you could have had a better investment rather than here? Well, let's take a look at some other stocks during this time. Let's take a look at Apple, ticker symbol AAPL, Apple Inc. What do you notice about Apple that is different to the AMC stock, right? Look at the angle of this price action. It continues to go all the way up, as Fat Joe would say, all the way up, right? So you can see the continuous alignment of the moving averages is with the 20 simple moving average at the top, the 50 simple moving average in the middle, and the 200 simple moving average at the bottom. So this is showing you that this is a bullish stock, right? And the whole market is bullish, right? It's on an upward trajectory, right? So if you'd have invested in Apple during this time, you would have seen gain in your money, right? You're gaining your position. All right, let's look at some other stocks at this time. And remember, these are just, stocks that you're familiar with. There are ones that are better than these that you probably aren't familiar with, but I'm just going with the ones that have, the big names that people seem to gravitate to. Let's go to Microsoft, MSFT. Similar story. Look at the direction of Microsoft. It's nothing can stop it. It's all the way up, continuing to go up in a bullish fashion. And we can see this most recent time we've had this whole COVID, not the COVID, sorry, we've had the decline in all markets, and we've had this Ukrainian and Russian war, which has been affecting the markets. But in the period previous to this, where this whole short squeeze play was supposed to be going on, and people were losing money as their position went down, you can see the increase in price in Microsoft. Let's take a look at something else. Let's take a look at Nvidia, which is NVDA. Again, these are just stocks that you would be familiar with. And so these ain't even the best one. There's better performing stocks than these ones, but we'll just go for these ones at the moment. Similar story again. We can see price movement going up in a bullish fashion, right? Let's take a look at oil. Commodities are, doing well at the moment, and that's the big thing. But look at oil. Oil has been doing fantastic over this time period, right? We can even see this massive spike here where prices is risen quite highly. So, and you can see a similar story. Again, look at the moving averages. You see the 20 simple moving average at the top, the 50 simple moving average in the middle, and the 200 simple moving average at the bottom, with price trading above it. So this is, again, another sign of another bullish stock, right? So after seeing these, let's go back to AMC again. AMC is not showing this. AMC is the complete opposite. While you've seen everything in an upward fashion, this is going downward. So this is the reason why I'm not invested in AMC, right? While, some people, well, let me not speak about other people. Let me speak about me. If I had put my money into AMC and I've been holding onto this position, my money couldn't have been in other stocks making money while this stock is losing money. Okay. So again, the AMC move is a fundamental play, and we don't do fundamental plays. We do technical analysis plays. And this is why, once we start looking at the technicals and start looking at the charts, it starts, clears away all the noise, the news and opinions. And we can see actually what price is doing, rather than what the speculation is and what the news stories is and what people are ranting and raving about. We can see what the actual reality of what price is doing here. So price is going bearish, it's going down, it's not going up, and it's actually more in favor of, those people who have shorted. Now, who knows at what price these institutions came in at? If the institutions came in, let me play this. If the institutions came in at its low level here and shorted, we're away from price, but it's not massively away from price. It's like, I'm assuming not every one of these institutions shorted at this immediate level, right? So there's plenty levels in between here. So just depending on how far you were, but price is closer to our lowest level than it is our highest level. Our $72 level is here. And you can see that price is clearly moving towards the lowest price rather than its highest price, right? So, who's to say that, along these positions here, I don't know at what point these investors invested in. And you can see here, even if we look at, a significant price is here at this high of the first run of this first peak. And you can see why price is kind of hovered as at a resistance level here. So I'm assuming that there was a lot of investors around these levels that maybe was trying to short. And then when price came to this level, a lot of them got out of their positions. This is why you're kind of seeing a lot of upwards and downwards movements along this line, right? So who's to say, how many investors are still involved, at what price they got in, and who's not to say that this price won't continue, down to our lowest level that we saw previously, right? Which is here. Now we do know that, obviously theaters have opened up a bit more now, and people are going back to the theaters to watch their favorite movies and all those things. So we can expect the business of AMC to kind of pick up a bit more. So we probably won't see it go down all the way back down to this lowest position. But it's still lower, it's still going in a downwards trajectory, which is not the kind of the kind of play for a short squeeze. All right. So this again is the reason why I'm not invested in AMC. Number one, because it's a fundamental play and not a technical play, and I'm a technical analysis, and I think you should be too. And the second thing is on the fact of the fundamental play of short squeezing, it's not even performing as a short squeeze because the price is not getting pushed up by people buying these shares, and actually, the price is going down. All right. So this again is the reason why I'm not into this. So if you would like to know more information about, the best strategy in order to, gain in these markets, as you saw before, I showed you some stocks that were rising in the same time frame in the same period. And these weren't the best performing ones. These are just ones that you're more familiar with. This is why I showed you them. But there are those stocks that are outperforming the ones that I showed you, right? So if you would want to know, more about which stocks are outperforming these ones, and how, during this time why people were holding onto this stock and losing money, how you could have been making money and how to make more money in the future, you can go to focusoninvesting.io. That's the trading platform that we have that teaches you, how to trade these markets, how to get into technical analysis and really understand what the market is doing, rather than listening to a lot of people with news, noise, and confusion, whether it's in the mainstream media, whether it's on the internet, telling you one thing when the charts are clearly showing you something different, right? So again, that's focusoninvesting.io, where not only will we give you, access to these tools and the ability to analyze charts, we give you the education, but also, we will actually provide for you those, not so well-known stocks that are very bullish and that you could actually be making money with, instead of losing money. All right. So if you guys have found this video informative, excuse me, and found the information really good, and you would like to keep seeing a lot more of the information that we're doing around trading, more about technical analysis, analyzing different stocks, analyzing different trading strategies and things like that, then please go ahead and hit the subscribe button. If there's any particular stock that you would like me to analyze, go ahead and leave that down in the comments. And for now, thank you very much for tuning into the video, and take care. Peace.